Coming up today, the S&P hits a new record as investors are still pessimistic. Intel rips higher on a potential breakup, defense stocks fall, China's changing policy, and everything else you need to know at the start of this shortened trading week. Let's have a good one, guys. And welcome back to the Click Capital Daily Market Review, everybody. Hope you had a good long weekend. We got the stock market starting off this shortened trading week at brand new all-time highs. Once again on a really low range, low volume day. It's going down to a 5-minute chart. It's actually the last 5 minutes of the day. Stocks really moved up there on volume. You can see that in the Qs and also the Russell 2000 as well. And so we don't have much out in economic releases this week. A few PMI readings. Making our way through to the back end of Q4 earnings season. We've still got the Russell 2000 about 7.4% below all-time highs. However, underneath the hood, we've still got plenty of action going on. In fact, I'm happy to report that my stock picks account has now returned over 50% in time-weighted returns since starting this new portfolio in service back in June last year. That's versus the S&P 500's 14% return in the same time period. So I've more than tripled the market's return in that time, and that's with no leverage either in a diversified portfolio. With all my trade screenshots uploaded in the private members area. So if you're still following other YouTubers, that whilst they may sound smart and like they know what they're doing, but they never talk about their trades. Funny that, isn't it? Maybe because they don't even trade themselves. And that's why they don't have a transparent track record. Do yourself a favor and click the link below this video and sign up to our stock pick service today and stop missing out on this amazing bull market and small cap growth stocks that we currently got going on. And stick with me today because I'll show you later on in this video a small cap AI stock I bought the dip on today for a swing trade. It's got massive volatility and an exciting story. I'll show you the website later on. But just looking at the heat map across the board, once again, quite a bit checkered there. A little bit of softness in mega cap tech, but a pretty good rally in software, semiconductors, financials, and energy stocks today. Not to mention one of my favorite stocks of late, Intel, on a monster tear once again today, 16%, huge volume. And it was only a few weeks ago. A lot of people were saying Intel's been left for dead. Nobody would be interested in buying them. However, I could see they had massive government support. And why I got into the stock, just as I told you guys, actually locked in some profits today. And just going out to a monthly chart here, do a little bit of technical analysis. Where could we see it going? I know I did say this time last week we could be trading in the 30s by Christmas. However, we're already trading at 27.5 as I speak. Just technically speaking, I can see a big zone of prior resistance and support around the 37 to about the 43 mark. So that could be a potential target for Intel this year. And like I said, nothing wrong with taking profits on any short-term spikes along the way, potentially buying the dip back in as well. Because here in the short term, even though it looks really good, momentum thrust signal, that really bodes well for the medium term. But short term, I can see we're super stretched here. 19 on the DSI, 28% above the 50-day VWAP. And that's typically what I like to do is sell into strength. But obviously why it's been ripping of late, first kicked off by comments from Vice President JD Vance at the European AI Summit, vowing to bring chip production back to the States. We kind of already knew that. However, why it's been running really hard as it's obviously been leaked. That large chip makers Broadcom and Taiwan Semi are potentially weighing independent deals that could split up Intel. And that's really what got the stock pumping again here today. So Broadcom may be interested in the company's chip design and marketing segment, whereas Taiwan Semi could be interested in a stake or complete control of their factories. And this could actually make a lot of sense to partner up with these big chip makers and help them turn around and just make the American chip manufacturing industry stronger. The big infusion of capital. But this is all still very early days. A deal may not even eventuate, and we could get something completely different as well. Just looking at Broadcom there today, pretty flat. Taiwan Semi did come off a bit as well. Had a nice bounce back in Dell of late, and AMD just once again slightly ticking higher. And of course, the big one, Nvidia, also trading up again today. We got earnings out from Nvidia next week. We could come up a little bit higher here on the chart, 146, 147. However, I think the market may pause, consolidate, maybe even pull back before earnings. Maybe a little uncertainty sets in. However, I expect their guidance to be good. Still a massive arms race for compute power around the world. We just heard Elon Musk said he expects his company XAI and their next training cluster to have 1 million GPUs, worth about 25 to 30 billion. That's 5 times more than their existing supercluster farm of 200,000 GPUs. So Nvidia is still set to benefit from that, and many other hyperscalers and their huge spending. And in fact, X just released the latest version of their chatbot Grok, version 3, and that's already scoring above Gemini, DeepSeek, Claude, and GPT on multiple measures. So it'll be interesting to see what we get from Nvidia's earnings next week. Should expect a beat and some good guidance as well, and probably some language to push back on the DeepSeek narrative, which we just closed that gap today actually. And just looking at Tesla stock itself, just like the market, really low range, low volume day today. That's been a misconception lately that they won a well-timed contract from the Trump admin. However, if you look at the details, the facts, they didn't actually win any contract. It was actually a procurement initiated by the Biden administration late last year. And that procurement forecast was actually revised in late December. And so it was just media coverage. Once again, mainstream media just trying to pull the wool over our eyes of a document that was just amended. And in fact, because of appearances of conflict of interest, has actually been pulled. And so there's no $400 million contract for Tesla for new military vehicles. And even if it was true, that's a drop in the bucket for this $1 trillion company anyway. So anybody telling you Tesla bounced because they received well-timed contracts doesn't know what they're talking about as usual. But they do continue to get positive developments, like a new megapack contract to build a new battery storage facility in the Netherlands. They're doing these things all over the world. That's why their energy and storage business is actually their fastest growing segment. Elon also met with Indian Prime Minister last week. We've actually seen Tesla been posting some job openings in India. And I agree with this guy here. A gigafactory in India is inevitable as well to help serve that large market and surrounding countries. But no doubt the media is still going to create these clouds, misconceptions, psyops. That Elon cleaning up government spending is hurting Tesla's sales because the reality is they want it to hurt Tesla's sales. They want to see the company fail. But as usual around here, we'll be paying attention to what's actually going on, not just the FUD that's been spread. Also saw a big rip today in Super Microcomputer, really bouncing back this last month or so. As there's speculation, they'll be a major beneficiary of some big AI server contracts, just like Dell and HP have one of late. And it looks like fears have been quelled of any accounting irregularities at this company, which was severely tarnishing the stock just a couple of months ago back in November. But as we could see on my institutional buying indicator, it was actually peaking right around that time as well. Pretty good reading there at 73% on the 11th of November. That was that day there, the 11th of November, after they just reported a slight earnings beat as well. And if we look at my seasonality forecast indicator back on that day as well, 11th of November, it was letting us know the stock typically performs well going forward the next few weeks, next few months, which it pretty much did. It bottomed out a few days later. And so if you'd like to get this seasonality forecast indicator in TradingView for free, click the link below this video and you can get it added in there today. And so when you see my institutional buying percentage indicator going red, that doesn't necessarily mean that institutions are dumping. It might just mean they're pulling back their buying, as that's what this indicator attempts to estimate. And with these reversal signals firing off today and the DSI at 19 may not be a bad time to take some profits on any long trades here. But of course, these momentum thrusts on this big volume accumulation, that bodes well for the medium term. Just going out to a weekly chart, did have a big downtrend second half of last year. However, we can see a clear break of that downtrend after the most recent earnings here. And so this still may be playing a bit of catch up as well. And again, guys, I didn't just design all of my 28 custom indicators over the last 9 years to be sold. I actually use them every day myself to find trades and pinpoint opportunities in the market. And just speaking of the market, it's funny, isn't it? We're sitting at literally all-time highs in the S&P 500, still a bit below looking across the market sectors, Russell, mid caps. However, pessimism is still quite elevated. I think the consensus out there is that since 23 and 24 were good years, 25 has to be a bad one. It's going to be volatile, it's going to be rocky, look out below. However, 23 and 24 were good years for mega cap tech, which drove the S&P and NASDAQ a lot higher. Looking underneath the hood, small caps, mid caps, a lot of them have only gone up a little bit in that time. In fact, a lot of high growth stocks are still well below their 2021 highs. Many of them have been forming big bases, with a few of them just breaking out of those bases, still not even halfway back up to 2021 highs. So yes, the S&P 500 and NASDAQ very well may not give us another 20% plus year like they did the last 2 years. However, that doesn't mean small caps and some of these former high growth flyers can't close that big gap with their mega cap peers. And so I've been taking positions in some of those sort of stocks the last couple of months in the stock picks portfolio, along with a heavy weighting to small caps. And that's really what's been working in the market for a few months now. So many people get fixated on the S&P 500 and other indices that have actually been consolidating for a while. However, like I said, underneath the hood, there's plenty of momentum, whilst a lot of investors are still pessimistic. And it's easy to see why. We're getting bombarded every day with headlines. New administration is moving at lightning speed. There's a lot of moving parts. We just heard from the president over the weekend. On trade, I've decided for purposes of fairness that I will charge a reciprocal tariff, meaning whatever countries charge the United States of America, we will charge them. No more, no less. So it is hard to argue that that's not fair. However, what's going to do is induce other countries into making a deal, like the European, already dropping their tariff rates on US cars coming into Europe to try and get ahead of this. And I think the ultimate result will be that other countries do drop their tariffs. This is really going to help US exporters sell more overseas, especially if the dollar can also come down a little bit as well. For many years, the US has been treated unfairly by other countries, both friend and foe. This system will immediately bring fairness and prosperity back into the previously complex and unfair system of trade. America has helped many countries throughout the years at great financial cost. It is now time these countries remember this and treat us fairly. And so what happens if it actually works? Like I said, if you pay attention to the mainstream media headlines, you'll be led to believe everything's fallen off a cliff. However, I think there's reason for optimism, not only on global trade deals, but also on global geopolitical tensions. Under the Biden admin, we saw geopolitical risk rise to some of the highest we've ever seen in our lifetimes, as wars were getting escalated and escalated. However, now we've got Russian and US officials holding their first formal meeting in years, trying to work out how to end this war in Ukraine. Also interesting to hear from the US leader over the weekend. He wants the US, China, and Russia to cut military spending in half. And that would be great for global peace if achieved. Because if there's going to be a big global war, it's going to have the States, China, and Russia involved. And so for years, there's been an arms race in military, weapons stockpiling. However, there's really only two outcomes of all that. All those weapons end up sitting there and not getting used. It's a waste of resources. Could have been better allocated throughout the economy. Or even worse, they do get used. And we end up just blowing each other up for what? Basically nothing at the end of the day. And so on the back of that, defense stocks have been under pressure. And as you guys know, throughout the Biden years, I was quite bullish on defense stocks. They're actually doing really well, outperforming over the last 20, 30 years actually, as previous American governments poured trillions of dollars into them, including sending trillions of dollars overseas. However, now Europe's waking up that they actually have to defend themselves. They can't always rely on the American security guarantee. And why should American taxpayers pay for the security of Europeans when the Americans have a higher debt to GDP than they do? Responsibility shouldn't fall on the American taxpayer. It should fall on the Europeans defending their own ground. So their defense stocks have been ticking up while US defense contractors have been ticking down. And this is something they've been sniffing out for a little while here. You can see it in one of the biggest, Lockheed Martin. Trading down going into and coming out of the election, and especially the last couple of days as well. Same deal with Northrop Grumman, another big defense contractor, and similar look for General Dynamics. Now, of course, these companies are not going anywhere. They're going to be needed for many more years. However, they may not have the same political tailwinds. Elon and Trump really want to cut government spending, and defense is the biggest expenditure by the US government. Americans don't get universal health care, but they do have 100 plus military bases around the world. But again, it's not up to the Americans to be the world's policemen. Of course, they need to protect their interests, along with the West at large. However, with debt currently running at 6% of GDP, the priorities are changing. The spending is being cut. So long story short, for us investors, like I said, I'm in no rush to buy defense stocks here. They were actually doing a lot better in the Biden years. But also in the firing line is industries that import a lot of parts. Like auto parts, also home builders. Could be isolated pockets of pain for some industries and companies, along with isolated pockets of inflation, product category levels. And so you got things like 32% of appliances and 30% of softwood lumber coming from international trade. Easy to see why builders could be getting nervous on tariffs. But again, just opens up the opportunity, work out a deal with Canadians and other countries for lumber and incentivize domestic production. But again, just looking at the price action, home builders are still under pressure here, looking pretty soft. And isn't the market good at playing gotcha? I mean, coming into all this, a lot of people assumed it would be Chinese stocks getting hammered on the back of global tariffs. Not American defense makers, not American home builders, retailers. Actually got Chinese stocks ripping, one of the best performing markets this year. And we just saw their leader, Xi Jinping, hold a very symbolic meeting with Chinese tech leaders and entrepreneurs, as they had been clamping down on them for the last couple of years, as they got insecure due to their rise. However, I think they've realized they need them for China to succeed. And so he told them they've got his full support. The government's going to treat them all fairly and try and get behind them now. Give them a political tailwind instead of a headwind. And Jack Ma, who founded Alibaba, met with Xi for the first time as well. And like I said, pretty much officially signaled the crackdown is over. And some of you guys will remember I saw this coming. Back in late 2023, when Xi Jinping flew over to San Francisco to meet with American business leaders. Shortly after, we got a big double bottom in Chinese indices. And of course, we've had a big rip off those lows. And now every YouTuber and his dog is claiming they've been long China for a year. They saw this coming as well. However, I remember back here, pretty much all of them were hating on China, said it's dead, uninvestable. But I guess when you don't keep a track record, you can pretty much say anything, right? But as you guys know, I was buying the dip on Alibaba. I told you so in my shows, and we've just got a good technical sign, maybe just breaking out of this long multi-years base, and we'll get their earnings in 2 days. We may actually get a bit of a pullback. We've had such a good run here. Unless they blow out the numbers and guidance, we may just consolidate for a little bit. Also interesting to see, billionaire hedge fund investor that we follow around here, Bill Ackman, talking about forming a new company that he's calling a modern day version of Berkshire Hathaway, referring to Warren Buffett when he overtook Berkshire Hathaway in the early 1960s. It's a dying textile company, and he turned it into a conglomerate, owning either a share of or completely outright 100 plus businesses. And so Bill Ackman's looking to do the same thing by making a takeover offer for Howard Hughes, a real estate development company he's held a position in for many years. He's looking to take it out at $90 per share, and like I said, turn it into his own Berkshire, where he can accumulate companies outright and own shares in, just the same way Warren Buffett does it. And there's a look at Howard Hughes, formerly the richest man in the world. And if you think Elon Musk's out there, suggest you look into this guy, for which he was famously portrayed by Leonardo DiCaprio in the movie The Aviator. Anyway, there's a look at the chart. Popped up a bit there today, coming off after hours, but Ackman wants to take it out at $90 a share and turn it into his own investment vehicle, which is interesting, gives us investors an opportunity to ride it along with Bill Ackman, and he does have an impressive long-term track record. So we'll keep an eye on that. Also just got some interesting news today out of NASA, increasing their probability of the city killer asteroid striking Earth to 3.1%. They first came out and said it was a bit over 1%, then they increased it, and then they've increased it again. So it's now a 1 in a 32 chance that it'll hit Earth in 2032 and could potentially take out an entire city. And it's past the threshold for government agencies involved in planetary defense, as well as the Space Mission Planning Advisory Group and United Nations Office of Outer Space Affairs to be notified. And I'm just wondering if SpaceX, in partnership with NASA and maybe a few others, put together a mission to try and shoot it down, or at least break it up before it gets into Earth's atmosphere. But either way, just like nuclear, any large asteroid is actually bullish, because if they do take out Earth, then you don't need to worry about your trades. If they don't, the market will rally in relief. And just before I get back into the charts and show you that stock I bought the dip on today, just an interesting infographic I'm sure my American friends will enjoy, looking at population trends since COVID 2020 to 2024. Apart from Puerto Rico and Hawaii, looking at the continental United States, the lower 48, 6 states actually had a population decrease. New York, West Virginia, Illinois, Mississippi, Louisiana, and California. The largest increases coming from Florida, the Carolinas, also up there Texas, Arizona, Utah, Nevada, and Montana. And this is one of the kind of advantages the United States have got. Labor mobility. 50 states that, whilst united, also compete against each other at the state level for both capital and talent. And that's the difference between the European Union. They've got 27 countries, but they're not as well united and still very much operate on a localized basis, with some of them becoming the dumping ground for the world's worst, and why they've seen a lot of crime spikes. But just getting back to the States, that is a trend we've seen over the last couple of years, not just with people, but companies, especially in the trading world as well. A lot of companies coming out of New York, relocating to Florida and Texas, where they feel is more business friendly and they're more welcome. Just getting back to the charts, we had a lot of online buzz of late around grab holdings. It's kind of like the Uber of Southeast Asia, 20 billion market cap, pushing up there again today. Another one bouncing back, Lemonade, modern day insurance company. Got earnings next week with them. Palantir continuing to tick higher. Showed you guys a hedge trade I put on late last week. And if we keep ripping into the 130s here, I'm going to roll that out to the May expiry and actually set up a slightly different trade structure, which I'll share with you guys, that I think will better suit this stock situation and what I'm trying to do here with this hedge. Also getting a nice bounce in Moderna today, along with some other biotech stocks as well. Plenty of activity there. Uber's still continuing to tick up, although we are getting a little stretch in the short term here. And a pretty good bounce there for Walgreens. These big accumulation candles continuing to come into the stock. And the stock I alluded to at the start of this video that I bought the dip on today, Cloud Structure. I was talking about this stock a bit last week as well. Massive volatility, hugely speculative. Got a very low float, only 14 million shares, currently trading around $10. So I initiated a long swing trade in this stock today just before close. Given its massive volatility, it is a small position for me. I will look to add to it any further dips we get. And I'm looking to see over the coming weeks whether we can get another rip into new highs and sell into strength. When it's showing up on everybody's radar and it's a trending stock, Wall Street bets and everyone jumping over each other to get into it, that's who I want to sell to ideally. And why I think it could go on a bit of a run is it does have an exciting story and product. Multifamily, cloud video surveillance, and live video monitoring services. The only AI video surveillance solution with seamless remote guarding software and live monitoring services for end-to-end security. And so this is one industry that AI is already touching, surveillance security, and something I've been investing in as part of my stock picks portfolio as well. And so this company's already got revenue, although still small, they are growing. And again, I think they're just in the right industry at the right time. I'm not buying this based on valuation. I'm buying this based on speculation that the market could run with this stock due to it being an AI. And like I said, the market cap currently still only around 150 million. And if they were to come out with any good positive news, new contracts, good revenue growth, that could set things off. But like I said, wildly volatile. Just on Thursday, got up to $52 a share. Here we are at $10.50 at the end of Tuesday's trading. And so like I said, just a small swing trade for me, which I may look to add to, even if we take out these lows at 530. As always, it's not financial advice. Please do your own research. I'm just sharing my opinions with you, and we'll see how that one goes. But that's pretty much a wrap for today, guys. Like I said, market looks to have moved into this low volatility, low volume grinding mode, which it can just continue to grind higher. Do have the VIX pretty subdued at 15.3. Not much out in economic releases this week. Do have PC inflation next week, along with GDP numbers, making our way through back end of Q4 earnings season. which has been doing a bit better than average as well. And we'll keep an eye on yields. For now, look to be still bumping around. And also the big one next week will be Nvidia. So the market kind of left to its own devices this week. We'll see what price action and any surprises we get. Thanks very much for sticking with Click Capital. And like I said, guys, if you haven't already, I strongly encourage you to jump on board our stock pick service with us, as we're now up 50% in time weighted returns since June last year. That's all today, guys. I'll see you again this time tomorrow. Cheers.